Welcome to Profit Insights, the show where we sift through the market's noise to uncover real opportunities. I'm Dusty, and today we're diving into the latest market movements, key financial stories, and some tips to help you navigate these unpredictable times. Yesterday, October 21st, 2025, the U.S. equity markets gave us a real mixed bag. The Dow Jones Industrial Average soared to a new high, adding 218 points. It seems the automakers and industrials are having a stellar season, driving those gains. Meanwhile, the S&P 500 barely moved, and the Nasdaq dipped slightly, thanks to some profit-taking in big tech and chipmakers. Breaking down the numbers, the Dow closed at an impressive 46,924. The S&P 500 stayed nearly flat at 6,735, while the Nasdaq dropped to just under 22,954. Interestingly, the aerospace and defense sector shone, rising nearly 2% thanks to robust defense backlogs. As for the broader market landscape, we've seen some wild swings in commodities. Gold experienced its biggest one-day drop since August 2020, plummeting 6%, while silver fell 8%. Oil, on the other hand, bounced back from a 5-month low, ticking up slightly. Bond markets are seeing some movement too, with U.S. Treasuries rallying and long-term yields dipping. On the currency front, the U.S. dollar continues to strengthen, particularly against the rand, the baht, and the won. This comes amid the appointment of Japan's first female finance minister, which coincides with a weaker yen. Now, let's talk central banks. A recent poll of economists shows almost unanimous expectations for a 25 basis point cut at the Fed's upcoming meeting. With the government shutdown muddying the waters on data, the Fed's path for 2026 remains anyone's guess, with some predicting rates as low as 2.25% and others as high as 4%. Turning to corporate earnings, several big players are making waves. General Motors reported soaring demand, boosting its forecast and its stock by nearly 15%. 3M also impressed with strong results, and defense giants like Lockheed and Northrop are riding high on defense spending. However, Netflix didn't fare as well, missing Q3 earnings targets and taking a hit in after-hours trading. Tesla is next on the docket, set to report its latest results today. With big expectations, all eyes are on whether it can keep the momentum going. Interestingly, 87% of the companies that have reported so far have beaten analyst expectations, highlighting a positive earnings season overall. As we look towards the opening on the 22nd, futures are cautious. Netflix's weak results and a warning from Texas Instruments are keeping investors on edge, as everyone waits for Tesla's numbers. So, what should investors focus on now? With inflation data delayed and fiscal policy unclear, staying diversified is key. Keep an eye on sectors showing resilience, like industrials and defense, and consider taking profits in sectors that have recently seen substantial gains. Thanks for tuning in to Profit Insights. Remember, in this ever-changing market landscape, staying informed is your best strategy. I'm Dusty, and as always, when the dust settles, only the truth remains. Catch you next time.